Welcome to ULT. I wanted to make a quick video today to introduce a challenge that I'm going to give myself, and I'm going to do this for the next 10 days. So today is Tuesday, April 30th. So I'm going to start it tomorrow, May 1st, and we're going to go for 10 days. And I'm going to start a Top Step account just for this challenge. And I'm only going to trade this very specific set of criteria on that account. And we're going to see how it does over 10 days. Now, if it works, it's probably going to get funded in the first couple of days, and then we'll watch the funded account grow. So we'll see how that plays out. But if you've been watching me for any period of time, you know that I have an open range trade that I trade in gold every day. But my challenge has been that my entries are okay. My stop loss, I'm working on getting my stop loss kind of dialed in. The strategy itself works really, really nicely, but it's usually my management of the strategy that causes pain and anguish. And so in order to get used to just mechanically entering the trade, I'm going to set it up with very tight parameters and a very tight target. So the intention of this strategy in the long term is to be able to catch trends, because a lot of trends start at this point, but that takes a lot of patience. So in order to kind of start that process and build up to that point, this is what I'm going to do. So right here is the criteria. All right. So I have another video that goes over in more detail the strategy, but very simply, I'm going to enter at the break of a candle that retests the opening. I should change this. Hold on. Retest the midpoint of the open range. Okay. And this works not quite as good, but pretty well in oil as well. But we're talking about gold specifically here. Okay. So we have the first 15-minute open range. We're looking for that to be formed, right? So we're not going to enter before 7:35 Central, 8:35 Eastern. Once that range is formed, we look for a retest of the midline and a break of that candle, okay? Now, when I went back and looked at the history of all these trades, they all have a reaction. There's almost no instance where it just fails and doesn't work. That happens sometimes, but very, very rarely. And so what I'm going to do is I'm going to be looking very simply for 15 ticks of profit. Okay, so that's pretty small. I am going to be leveraged up for this. So I'm going to be trading all 5 contracts that's available to me in a $50,000 Top Step account. So a winning trade will be, $750 or so. And we're going to go with that. So enter at the break of the candle. So in this case, form the open range. This candle comes up. See how it pushes through that midline. The entry would be at the back of this candle first, right? So once this candle forms, put my order there. Then once this candle forms, put my order here. Get ticked in and it goes. The criteria, or I guess one qualifying factor that has to be present for this to be valid, is that the kind of the trip into the midpoint has to come from either a recent pivot higher low, or at least not a higher low or a lower high, and I'll show you an example of that. And that's really it. That's it. And then the ATM strategy will be set up with a 15-tick target, 25-tick stop loss. I'll have it to automatically move the stop loss to 10 ticks of profit. 10 ticks of profit, so not 10 ticks behind my entry, but positive 10 ticks once we hit 15, because sometimes it'll hit that and bounce off of it. So in case that happens, doesn't happen often, but we're going to lock in at least 10 once it gets to that 15, because as I looked back, almost all of them go at least 15, or a very, very, very high percentage of them. So what do I mean by not entering off of a higher low or lower high? Well, very simply, in this case, the entry is here, right? We're coming off of this low. Look to the left. There's nothing here. This is the low. Come up, we come down. And this is a trade I took today that failed, obviously. But, and that's why I've added this rule, is because let me move this line out of the way. Go away, line. There we go. So we have this low. We come up into the midline. We push down. And I'm looking at the wicks of the candles, not the bodies of the candles, the wicks of the candles. This wick, right, is higher than this wick. So we have a higher low up into here, and then it fells. We push up before we come back down, okay? So before we come into this midline, we have to have at least matched a previous low, or ideally have created a low, okay? So the valid entries today were here. No entry off of this candle because it's a higher low, as we just discussed. We push up through, we come back down. There's no entry here because although we've created a recent high and we're coming in to test it, if we followed the order behind each candle, once a candle forms on the opposite side, it's no longer a valid trade. However, because we now have candles forming on the other side, now we're coming back up into the midline from a place that works. So it has to originate from a recent high or a crossover. Okay, so even though this low is higher than this low, I'm okay with that because we crossed over the midline right here. We come back up into it, place the order here. Once the next candle forms, place the order here. We take it. That would have won. From there, we never come back to it, never come back to it. Okay, we do tap up into it here, but we never have a break low of any of these candles before we push back up. Now this one would have failed. Okay, we came back down, we tested. So this was a valid entry. Okay, it did fail. I'm going to set the stop loss for this strategy at 25 or beneath the lowest low, right? So it would start off, at 25 down here, but in this case, if I were trading this, the stop loss would be 18. Okay. Overall, this should net roughly a 1-to-1 risk reward most of the time, but it should have a very, very high win rate. So this failed. We come down below, but we have no cross below, so there's no entry here, right? Even though the candle bodies are down below the midline, the wick is still touching. So we want space. We want a little bit of room between the candle wicks. And when I say candles, I'm talking about the entire candle, wick and all. Space between the candle wicks and that midline, okay? We come back down, and I should add this in because the red line, this red line is pretty strong. So if we come back up to the range, okay, and we kind of push through, but we get a nice reaction off the red line, that is a valid trade, and I would take that trade as well. All right, that's the last trade of the day here. Of course, it's still early in the day where it's 11:30 Central, so price is still doing something over there, but we're done with it for the day. And that's it. So we're going to do that for 10 days, track the results, see how it works, try to be super mechanical about the entry, so that I can really get, it's really to develop discipline in following the strategy and the entries. It's also to sort of validate and show the results of this strategy over more than a couple days. I think I've shown it, we could go back over the last several days and look at all the entries that worked out based on that criteria just perfectly. We can go back one more day real fast. Right, we create the open range, we kind of bounce around, boom, boom, boom. There's the midline. All right. Now this one, I guess you could say, well, you've got a low here and you've got a low here. These are far enough apart that I'm okay with it. And I don't know what the exact number is. I guess that's something I should probably quantify, but this low over here is at 7:46. This one's at about 8 o'clock. So they're 15 minutes apart. That's okay to me. You know, and I guess you could say, well, it's easy to say that because this works, right? We come back up. Actually, this is the candle that touches the midline. But if you're following your order behind the candles all the way up here, you won't get ticked in until this breaks. And this breaks down for, this is a much tighter range, so it doesn't go quite as far. It goes 18 ticks, so we still would have got our 15. Now we have, there's a low, whoop, there's our high. It's also a red line test, which is kind of nice. This one, however, barely, this one only comes 14, it looks like. So this may have been a fail. We'll see. It does get kind of, you know, you look at the price action here. And once we sort of start turning around here, that's kind of a sign that it's probably not going to go lower. But worst case, let's say it failed. Let's say we got stopped out. Our stop would have only been 10 ticks. Okay, so not too bad. Let's see. This was a trade I took yesterday. This is a one candle retest that worked. Yeah, so all these midlines worked, right? If you were here and you're following the candle up, we get a candle close, you know, above that midline. So even if you're ready to go short, you never get triggered in, so no big deal. And that's it. I mean, I guess if we waited all the way till over here, yeah, see, this is another one where you have a lower high, but 9:07 to 9:21. They're about 15 minutes apart. So that's far enough away to where this would be fine. You could enter here. Clearly that goes 15 ticks. Does it again over here. Even though, so this is like equal highs, right? So we're coming from this equal high here down. Boom, that works. So this has should have a very high success rate, even with a few losses that, you know, might come in here or there. Although I will say, if we get into a situation like this where we're losing momentum, I probably will get out early. I don't necessarily have a rule on that, but that's it's probably what I would do. So let's look at the next day. One more day and then we'll wrap it up. This was a trade I took. So this is one of the trades I took that came back for break even because I was holding for more. This one is kind of an immediate test of the midline right here. You can't, there's a wick of a candle right here in that line that forms the open range box. So take that entry, that, you know, it goes 48, so that works fine. Come back down to the midline, falls right through, no entry. Comes back up to the midline, falls right through, no entry. Comes back down, never touches, never touches, never touches, never touches. Breaks back down, touches. We got the red line. We've got everything in our favor. Works just fine. And then this is basically the same trade that happened today and at almost the same time, interestingly enough, right? We push through the bottom of the range, we test the midline and the red line, and it falls. One thing that you'll notice on these red line trades is it tends to, red lines don't reject quickly. You can see it kind of chops around here before it does come down, but it certainly rejects. And that's it for that day. I mean, we could keep going. And that's what I like about this strategy is it's pretty easy. This one, the range is created. There was news this day, so it was just like sideways, sideways, sideways. You know, I guess technically, when price is going sideways, we didn't really have a pullback and a return to the line. So even though price, you know, I guess there's space. The wick of this candle is hard to see, but it ends right there. So there's a little bit of space right here, but really price is just sideways. So that's not a trade I would take. And Fortunately, I did not take it this day. But once price starts to move, push above the line, come back for a test, take the break, and go. No problem. Down below, retest, one candle retest, boom, no problem. Comes over here, we just fly through it, all over the place. Again, there's some other trades in here, but we're only looking at this midline trade. And then this one, got you ticked in right here. Goes for 45, so that's plenty. I don't think you'd want to get in this one. I know I don't normally trade this late, right? I'm really only trading between up until about 10 o'clock my time, 10 o'clock Central. But this is a case again where it touches, it comes down, and it starts to like lose momentum and chop around. So I'd probably get out if I had taken that guy. This one here would not take this because, you know, what time do we have? 11:21 and 11:34. So I don't know. That's almost 15 minutes. So I guess you could think about taking this one, but that's probably too iffy. But again, I wouldn't trade that. So maybe I should add that to the list of criteria, right? I'm only trading this. I'm going to add this here. Hours between the completion of the open range here. So between 7:35 CST and 10 a.m. Okay. All right, so that's the 15 tick challenge. We're going to be scalpers in that account for 10 days. And then we'll take a look at the results and see what we get. 10-day challenge. All right, so let me know what you think. Part of this is there's another challenge that I think maybe Mark Douglas, I've heard a couple of different people talk about it, but it's like it's a 20, I think he says a 20 trade challenge. Execute your trade mechanically 20 times, right? Just as an exercise in execution. So we should get 2 trades a day over 10 days. That's going to be the 20 trades at least. So we're going to accomplish all that. We're going to see where it takes us and share the results. So let me know what you think. Is this something that makes sense? Is there something I'm missing? Have you done something similar in your trading? And has it worked out for you? Let me know. Trade safe, and we'll keep you updated. Bye-bye.